can hear me, and we'll get started right away. Can you hear me? I'm not getting any responses. Let's take a look. Sorry, I'm in the wrong room, I think. Am I in the wrong room? I think I'm in the wrong room. Hey everybody, welcome to today's coaching. Sound check please. Yep, I'm switching over to I was in the wrong room. All right, so welcome. Hope you're doing well. Hope you had a good start to your week. And let's get started. So, I think did I? Yeah, I posted the watch list for tomorrow in the alert window. Okay, so you can copy and paste it easily. All right. So what we do in here every week is first go over the market quickly, go over the ideas that were posted today that were called in the newsletter, go over the watch list for tomorrow, tell you what I think, what I'm going to be playing, tell you why I'm playing what I'm playing, and answer any questions. We look at a lot of charts basically. Okay. Q's wasn't sure about today, like coming into the day, because we had a breakout. I thought we had a breakout failure, sort of, setting up on the hourly chart. So I thought we might be lower, actually. Didn't. We got bought right from the beginning almost and closed bullishly. So the market is back to bullish, looking up. No two ways about it. The IWM, completely different. But the Qs and the SPY, really bullish. So the focus is going to be on bullish names going forward. That's our focus no matter what, pretty much. And when I scanned after the close this afternoon, I only found bullish names. There's only like one bearish name that I'm aware of that looks okay short, but it's a big stop. It's the LI. Probably triggered already today. I'm not in it, but I'm just saying it probably didn't really take out this bar's low. So this one looks lower, LI, if anybody's interested. But I would, and Tesla maybe lower also. So maybe the EV stocks, XPEV rolling over, NIO. Let's take a look at Lucid. That doesn't look very bullish either. The only one from the EV stocks that looks higher is the Rivian. Rivian does look higher, but everything else is pretty much bearish. In terms of the plays that were called today, here's the newsletter. You get it via email, but I have it you have access to it as a subscriber through your T3 Live account. I have it as a Google Sheet. So let's take a look at them. The Monday triggered. The NICE ended up gapping. If you kept your order in the system and gave it room, you might have gotten filled on it. But that gapped above the entry. The Snapchat did not trigger. TRGP triggered. TSLL did not trigger. And the two shorts triggered but didn't really go anywhere. So let's copy the list over and go over it. So Monday, MNDY is a daily buy setup, plus kind of a 1, 2, 3. So the igniting bar, the narrow range bar. So above it, long, stop. There's two places for the stop, either under this bar's low, or as I've specified in the newsletter, under the pivot. So I'm going with the wide stop initially. Target 1, target 2, we'll see. And then as you can see, the alternate stop was under Friday's low, 219, 219.50 or 219.19. Okay, on the MNDY. So this one triggered. This one triggered. Didn't go anywhere. We'll see. But like it on the daily, weekly's at the right spot, and monthly transitioning. So it looks good across the board. The NICE was a climactic buy setup, and I was calling it as a breakout right here, or as a 1 2 3 on the daily. So long and with a stop under the base, and target I think 185 is what I picked. It ended up gapping to 180 and then dropped all the way down to 172.50 or so. So the call was over 171 and some change, so probably you didn't get filled on it because it ended up gapping and never retraced all the way down to the entry. So this one did not trigger. Cancel for tomorrow. I don't have a doesn't have a good setup anymore. So cancel the NICE. If you didn't get it, cancel it. Okay. This one already triggered. Snapchat is doing a monthly transition A, and I noticed. I mean, not now it doesn't look incredible. We have a big topping tail. Has a weekly buy setup, sort of. Right? Again, does not look incredible, but the reason why I called the Snapchat because I liked the Meta higher. It was already late. It's late to get it. I mentioned it last week over the base. Stop under the bottoming tail. So now it's a little late. And then the Pins is the other social media stock, which was already late. It had printed 2 big green bars in a row. So I figured maybe Snapchat, if it triggers on the weekly, but it came in. It did not trigger. I'm not sure whether to keep the Snapchat order in the system or cancel it, because I'm not loving it exactly. But you know what I'll do? This is what I'll do, is I will cancel the play on the Snapchat, and I will create an alert so that I can check it out in case it gets close to the trigger, which is about 1560, 1563 to be exact. So Snapchat, I'll create an alert for. If the last price exceeds 1550, this way it gives me enough time to look at it and make a decision as to whether I want to play it or not. But for now, let's go ahead and cancel the Snapchat as a play for tomorrow. Okay? The TRGP, we played this I think last year, or was it earlier this year? It might have been earlier this year, and it was an amazing play, and I got out of it. I don't know where I got out of it. Was it here? I believe, and it just kept going. Not much higher, but you know, it kept going for a bit more, and now it's breaking out. It's one of the very few oil stocks that did not come in much at all. In fact, as I said, it's been basing at the highs, at the all-time high for the last couple months. So this is just a daily, weekly breakout, and I'm using a big stop on it initially. If it gets going, we can tighten up on the stop, but it's a big stop, so not a lot of shares on the just 100, I believe, on the TRGP. TSLL, I was looking at it as a breakout ahead of the vote on Thursday, but it came in. It does not look good. Cancel the TSLL. This is Tesla, but it's the leveraged Tesla, leveraged ETF. So cancel the TSLL for tomorrow. GNLX is already an open position, was already an open position on the base breakdown, and I thought, you know, this looks good. I want to add to it a little bit. So I went ahead and added to it today just a little bit, because the stop is still the original. So, you know, we'll see. So, you know, it looks good. Nothing to do with it. Just stick with the stop. The RAPT gap down has been basing really bearishly, and it triggered by just a couple cents, I think. Like literally, wasn't it like a few cents, maybe more than a few? I thought it was literally a couple cents, but it actually triggered under 79. At 79 it got to 75, so 4 cents. Looks good, looks great. Stop can be, if you want to go with the tight stop, over 460. If you want to go with the wider stop, which is what I want to do, 86, just a little bit above. So as a base breakdown, so these three triggered, and then the Snapchat, the Tesla, and that's it, I think. And the NICE did not trigger and should be cancelled, especially the TSLL and the NICE. The snapshot, if you want to play it, be my guest. Still looks okay, but I'm gonna go ahead and cancel the order for it. In fact, as we speak right now, cancel, cancel, and cancel. Three cancels here. I have the nice in the day trading account, but I was looking to play it in the swing account. But I have it from the bottom almost. What does 50% risk means? Simply means $1,000 risk. I hesitate to put 1,000 because I don't want people to risk 1,000. Maybe that's too much. So I'm just saying 50% of my normal or my large risk, which is $2,000. So it's either 50% or 100 usually. If it's 50, it's 1,000 for me. If it's 100, it's $2,000. But I hesitate to type 1,000 because I don't want people to risk $1,000. So I know it's confusing if you're new to the newsletter that, hey, what's 50%? What does that mean? But it's a valid, I do want to tell you how much I'm risking, 50% or 100%, sometimes even 25%. That's why I have it in there. Okay. So those were the plays for today. 3 triggered, I believe, and 3 didn't. We'll cancel the ones that didn't. What does a 1, 2, 3 setup mean? I've done a few videos on it and they're on YouTube. I don't have the links handy, but if you email Amber, I'm sure she can send you a couple of those links. It's basically looking for a breakout. So here's what a 1, 2, 3 is. It's when you have a base breakout and then you have a narrow range bar and then continuation higher. So the breakout bar, the first bar, that's called bar 1. The narrow range bar, that's called bar 2, and then the trigger bar is called bar 3. So that's called a 1, 2, 3 pattern in the TPM class, according to the pristine method of trading. Okay, there's a couple of videos for you on it, probably different videos that I've done over time. But that's what a 1, 2, 3 is. If you have 2 bars rather than 1, then it's called a 1, 2, 3, 4. It's a very not creative way of telling you what the pattern is. I'll show you the RAPT on the monthly. This would be called a 1, 2, 3, 4. So you have the igniting bar and you have a couple of narrow range bars. So on the monthly, that's called a 1, 2, 3, 4 short. Okay, but I hope that makes sense, and watch those videos if you can. All right, let's go ahead and go over the watches for tomorrow. Volume is low. Okay, I mean, I'll increase it, but is the volume better now? Shouldn't be that low. Let's go over the watch list for tomorrow, and then we can do some more questions later on. We can take questions at the end if you don't mind, okay? So you can have 2 igniting bars. You can, but it's not ideal. So the pins, that's 2 bars, not 1. I strongly prefer only 1. Here's 2. We played it. I called it over here. Long. 2 bars. 2 narrow range bars, but I strongly prefer to have 1 wide range green bar, not 2. Because if you have 2, then the stock may need to rest a little bit before you use a very tight stop. It's already moved up a lot, so usually I like to have 1 bar. When I have 2, I may place the stop here, which is what I'm planning to do on the pins. Okay, but it's on the watch list. Let's go over it, and then we'll see what we find. So I found a bunch of setups for tomorrow, but they're not very good just yet. May take a day or 2 for them to shape up a little bit. So just a heads up, a lot of the patterns, we'll still have some plays for tomorrow, but a lot of the setups feel like are not quite there yet. They're not perfect yet. So just keep that in mind, okay? So the ADM reported earnings on this day, gapped up, moved up, tried to break down, failed. So this is higher. It should be higher because it tried multiple times to break down and failed. How do we play it though? That's the issue. It's not a pretty setup. It's like a buy setup, a pullback, and then maybe higher here today, but it's tough. It doesn't have a clean pullback. A clean pullback means, 3 or more nice solid bars, and then you get a narrow range bar maybe, hopefully, and then that's what a buy setup looks like. That's not what we exactly have. So I like it a lot, wanted to mention it, higher to at least to here, the 200 MA, but it's not exactly the prettiest setup. But I do like it higher, so it's just a watch item. The same with the Autodesk. It's not the same setup, but look at the Autodesk monthly chart. That's not bad at all. It's a pullback to the 20 MA to support. The 20 MA is pointing up. We had a very bullish gap a few days ago or last week, maybe the week before. So it's setting up for a breakout, but again, it's not I don't have an exact entry for it. So this is just a watch. Affirm has a beautiful monthly chart setting up, monthly buy setup. I mean, look at that beauty. We played the Affirm last year. It was amazing. Went from 27 to, which was the entry. I mean, the bottom was 16, but I think the entry was at 27. It went 27 to 60, I think, 50. So it was nice. Trailed out of it. Has a buy setup forming. So keep an eye on the Affirm. In terms of the entry, there's an entry off the weekly, but it's not very good right here. Because the weekly is still in a downtrend. Stop right here. Okay? Sometimes they pop and they don't give you a good entry. So over 31.40 with a stop under the lows. I am planning to do the Affirm because it's a long-term play. Okay? I'm taking a shot at this, even though it's very tough because the daily and the weekly are still downtrending. But I love that monthly chart and I don't want to miss out on it. I'll initially use a wide stop. So where's the wide stop? Under the whole thing. So the entry would so it would be over 31.40 by 28.40, $3. It's 28.49. Call it $3. So I'm willing to give it a shot on the Affirm tomorrow if it triggers, if it takes this out. If not tomorrow, the longer it bases above the 20, the better it becomes because the 20 is declining. So if you have a declining 20, here it is, declining 20, and the stock bases at or above it, guess what happens to the 20? It starts to curl and point up. So the longer, if it can pop a little bit and base, the better it becomes. Okay, but I'm willing to take a shot. The AI is pretty bullish actually. Look at the monthly on the AI. That's a nice monthly chart. Weekly looks okay. Daily looks better than the weekly. It's not a very tight base, but feel free to try it tomorrow over the base. I'd say stop right here or under this bottoming tail bars low. So it does look good, especially on the monthly. Monthly is an amazing location. The daily, unfortunately, we have a wide range bar. I rarely play long after a wide range bar because I like the stock to settle down a little bit and then I play it. Right? But this is kind of really interesting on the AI. I'll probably go ahead and pass on it, but it's one of the nicer setups that I got. AMAT is going to the moon. Looks really bullish. I don't have a setup on it, but it's just really bullish. Okay, so I don't have a setup. I'm not gonna be looking to play it long. If it prints a doji bar tomorrow, then we could look at doing it as a 1, 2, 3. The ANNX gapped up, pretty bullish gap over a big red bar, and is pulling back. So as a long over today's high, which is 584, stop under 532. About a 50-cent stop. Look at the monthly. That's a transition A setup. So it's trying to turn the corner. So picture maybe the hood, similar concept. The 20s curling up, curving up, and it, and that's where you want to look to play it long. So the same here, but not as pretty on the monthly, not as clean. Daily is a buy setup. Don't like it enough to do, so we'll let it go. Base is like the NICE, down a lot, a gap down, and so it's a bit climactic or oversold, as some people say. Long over the base, stop under it, and it's a very tight stop. So this is also kind of interesting. If you look at the monthly, it could be an anticipatory buy setup, because that's where usually a buy setup would form, in the area of the rising 20. So it would be right here. Now, in order for it to trigger as a monthly buy setup, we would have to get a monthly bar to close somewhere here, let's just say. Oops. Somewhere here. Trying to draw a cross, but just a bar, a candle. And then once it takes it out, that would be the trigger. The problem is when you wait, if you wait for the monthly to trigger, the plays will be gone. Most of the time the play will be like up here, in which case it'd be too late to get it. So this is also another one of my favorite watches for tomorrow. So base goes on the favorites. Okay, what I do with the favorites is I put them into the table that I showed you. Did I close out of it? This one. I basically put them in. So base, let's just say long, I put in the entry. So the entry in this case, it would be over 1831, stop under 1757, so 1836, 1749, and then I put in the targets, which would be, I would say, the gap fill. So lowest point, so about 21, that would be my target for it, and boom, it calculates the R to R for me. And so this would be a daily, daily, here it is, I just copy this, daily climactic buy setup. Okay, and it is a little bit aggressive too, but let's just, daily climactic, that's what that is. Now I haven't decided yet which ones I'm gonna do, because I'll put them all in this table that I have, see which ones I like, how many I have, and which ones I like the most, and those will be the official plays for tomorrow. The additional ideas will be at the bottom, as additional ideas. Okay, all right, so that's the base. CARG, incredibly bullish, but I don't see a good setup on it. Look at the weekly chart, it broke out last week. If you look at the monthly, it's even nicer. Look at the monthly, transition A. Transition A is when you have a stock that's in a long-term downtrend and the 20 starts to curl up and point up like so. So you play the breakout. Obviously we're late. It broke out already last week. I did have it in the newsletter last week as a breakout, but the stop was going to be huge, so I didn't do it. Long stop. But it looks good. So this is just a watch item. It doesn't have an exact pattern on the daily chart, so just a watch item. The CLRB is probably a monthly buy setup. Let's take a look. I'd have to open up the chart to see it on the monthly. And then let's take a look at the weekly. Yeah, looks okay. Trying to end the downtrend. Probably ended the downtrend already and transition higher, but it's a little bit sloppy. So just a watch item for tomorrow. Disney, we played the Disney last year or this year? This year. We played the Disney when it transitioned on the monthly. This transition, and then held it through earnings, gapped up, took half under that green bar's low, I think, and then the back half was when it gapped down. So the back half got messed up. Still made good money on it, but I'm looking to get back in it. It's trying to do a weekly buy setup, I think. Weekly is sort of a buy setup. It's the monthly that looks really pretty on the Disney. The issue with the Disney is the trigger for it. I know where the trigger is. It's over the base on the weekly. So here it is. Long right here, stop right here. That's not a very tight stop. That's the issue with it. So long over 104.22, stop under 100. So it's a $4.50 stop, about. So is there a way to get in it early? I don't know. Probably should have gotten in it today, but it wasn't on my watch list for today. It wasn't on my watch list. Where should we have gotten in it? Right here. 102, stop right here. Then it's a tight stop. Then if it ends up working, just to here, it'd be like 7 hours. 7 times whatever you risked. If we wait for it to trigger on the weekly, on the monthly, and it works, it'll still be nice, but it would have to do really well for it to make good money. So that's the issue. That's why I try to get in early, like get in aggressively, whenever I can, whenever I'm sure about the play. Even when I'm not sure, I try to get in early, because this way, if I'm wrong, I'm wrong, right? But if I'm right, I'll make a lot of money. So Disney is just to watch, because it already printed a big green bar today, so I can't do it just yet. But Disney is a close watch as a long-term play. The Elan has been something I've watched for a while, and it looks higher long-term. Elan. So that looks higher long-term, but I don't see a good entry on it. So we'll just keep it on the list, but it won't be called tomorrow. The EMN is, what kind of a company is EMN? Oh, that's, okay, yeah. Looks good. Weekly breakout. That's a nice chart. Look at the weekly buy setup here. What a beauty on the EMN. We have two options when it comes to the EMN. We can play the monthly chart, the weekly, the monthly, and use a large stop, or we can do the daily 1, 2, 3. So here it is, long, stop, or under the pivot. Since this is a very choppy market, I would go with the wide stop and play it as a long-term play. My only issue is, look at the size of stop. So it's over 103, whatever it is, 103.50 by 97.50. So it would have to, we'd have to hold it to 125 to make any good money on it. That's the issue. But you can always start with the wide stop and look to tighten up and add more shares with time. So can always, start with the wide stop and look to add more later on. So this goes on the favorites, but I'll make a decision on it tonight. After I get off the mic, I'll start working on that table and decide what makes the final cut. The ESTC was in today's newsletter as an additional ID as a 1, 2, additional ID as a 1, 2, 3. Didn't trigger, and now has kind of a 1, 2, 3, 4. So it's looking better. Most of the plays that I take have like interesting weeklies, monthlies. This is an interesting monthly. It's a monthly, I don't know what to call it. It's like a pullback and then a breakout over those bars. So this looks okay. Long over the base, stop under today's low, and then maybe target right here, 130. Could also use this as target 120, and then 130 for target 2. I'll look into it. I'll type it into the table, see what the R to R is, and go from there, okay? The FIS is also bullish on the longer term charts. The monthly, look at that monthly. Ended the long term downtrend. It's been in a downtrend was in a downtrend for 4 years in a row, I think. So ended the downtrend. That's the weekly chart. We played it before. It's pretty nice. I don't see a great entry on the daily chart. Can do it here. Stop maybe under the base, but it does look really, really good long term. Like, I like it higher to 150, to 140, 150, maybe 120 initially. That's another $50. So I do like it higher long term, but short term, it's tough to pinpoint the exact entry on it. The 4 is a monthly buy setup. Also notice that curling 20 MA, which is good, which is great. Here's the weekly, here's the daily. Big stop, long over this bar's high, which is 74. Stop right here or here. Either way, it's a really big stop, but it does look higher. I don't know if the guild is bottomed. Look at the volume on that big bar. It might have bottomed. Here's guild on the monthly chart. Good spot into all of that support. Here's the weekly chart. Looks higher to, I would say, to the red bar's high, which is $68. Not sure it's bottomed. Looks interesting. Daily, unfortunately, is a little bit difficult under the 20. GPS is a buy setup, deep pullback on the GPS after that initial gap up and run up. So usually the first buy setup fails. That's the issue with the GPS. Otherwise has a really nice hourly chart, hourly base breakout. And I also noticed the ANF today popped really hard. So this is Abercrombie and Fitch. Let's take a look at AEO. Oh, that's in a world of its own. Looks completely different. So GPS, ANF is too late. GPS is a buy setup. Will not be doing it because, again, I don't like to do the first entry after a deep pullback, which this was. HRTX looks amazing to me on the monthly chart. Notice the stock was in a long-term downtrend. Let me open up the monthly real quick. I mean, a long-term downtrend since 2018, and finally breaking the trend. Look at the volume on that move, on the up moves. So I really like it. The issue is it doesn't have any great entry on the daily, but I would say just over the daily highs. Stop under here. Hold long-term on the HRTX. This is not a great entry, but this is a great monthly chart. So it's better to get in late, get in with a weak entry, with a solid stop. That stop shouldn't get taken out. So it is a good stop. It's just not a great entry. But I think on something like this, if you like the monthly a lot, better to get some and then look to add later on than to completely miss out on the play. Inky is very, very bullish. So that looks good, higher. But here again, where is my stop? Right here. I can use maybe, 58 as the stop. Probably doable to use 58. And here's the weekly. Really nice. There's quite a bit of resistance above, not too far above, around 61.50 or so. And then target 2 would be 65, 66. So I like it, but it's a big stop. So I'm going to let it go for now on the Inky. Question, do you ever use a shorter moving average to get in? No, I don't. For swing trading, I only use the 20 and the 200. I don't use a shorter moving average. I don't know if the INTC is also bottoming. It may be bottoming. This sell-off here was like incredibly bearish. It happened so fast that it's mostly just one red bar on the monthly chart. Usually stocks don't bottom after just one red bar. They bottom after 20 red bars, 30 red bars, sure. Something like this, sure. But they don't usually bottom after just one red bar like we have here. So I'm not sure. At the same time, I don't know. It's Intel. Dropped almost 50%. From 50 to 30 to 20 something. 40%. And it's trying to, the 20 is curling up. Now, if INTC was basing here, then there would be no discussion at all. I would totally play it. But it's basing under the 20. If you want to try it, it's right here over that pivot. Stop under the daily base. I'm not really sure. It is tempting. I'll put it on the favorites. It is a little bit tempting. Let's take a look at the weekly chart. So it would be over 31.40. Stop under 29.90 or 29.70 if you want to give it the entire base. So INTC, interesting, but has issues. Biggest issue is the drop was really bearish. That's the biggest problem. But it is interesting. You guys like the INTC or do you not like it? What do you think? Yes or no? Yay or nay? Like it? No. No. Okay. Oh, wow. Nay. Okay. Yes. Okay. I do like if it bases longer. It's based long enough, by the way, because the 20 is already pointing up. I just wish it had based above the 20. Yeah. Yeah, this drop was earnings. You're right, but it was already dropping hard before. Look at the drop over here. So there's something wrong with it, clearly. They completely missed out on on AI. They probably didn't develop anything for AI, and that's probably what's going on. So Terry, do you like? I like it if it can base long. Okay, on the weekly, I see. Well, yeah, I know better names, but they're all gone. I mean, maybe the AI, the first one, or actually number 4 on the list, AI looks nice. But yes, I do gravitate towards the name brands because I like to hold them long term. Yeah, AMAT, but AMAT is also, this is down a lot. AMAT is going to go up another 50%. It's already up probably 50% or more this year. So I always like to catch the bottom on name brands. But yeah, it's tough. It is tough. The LE looks amazing long term. It has no setup yet on the daily at all, but LE is a really good chart if you want to keep an eye on it. The reason why I'm showing you these, oftentimes I don't go over everything that I like I am today, unless it has an entry, and I spend more time going over the open positions. But the reason why I'm giving you these is because a lot of you will not even be here next week. So this is a very, very nice monthly chart. Keep an eye on it, okay? And it just needs to go up a little bit more and then base breakout over 15, okay? The LQDA gapped up and is doing a buy setup. Looks all right. It's a nice gap because the stock was trying to transition and gapped up. So it looks okay over 1410. Stop under 1344. Might work. Gonna pass for now, but we'll have it on the watch list for tomorrow. So what I do is, this watch list that you see, I will have it in a watch list in my platform tomorrow and just go over it a couple times. Of course, anything that I have anything that I post in the newsletter, I'll have an order for live in my account. So if it triggers, I'm in it. I get in it right away. Can add to the MNDY, which triggered today, but can add to it over this bar's high and bring the stop up to 119.30. There's an idea to add to it. I have 150 shares in it. It's not a lot, 175. But it's a big stop because I'm using the big stop. And it's also an expensive stock. So, but anyways, can add, bring the stop up to here. I'm not quite sure, so I'm just gonna not add for now. Right? And not tighten up on the stop. I'm just gonna stick with the original position basically. Pins, like it a lot, really like it. It's unfortunate that didn't get the way it's set up. We didn't get that narrow range bar after the wide range bar. We normally do, and then it just popped. So it's a little bit late, like a couple dollars late. But here's my suggestion: long, and stop under the big green bars low. If you want to be absolutely sure not to get shaken out, under the whole thing. Of course, then it would be a $4 stop. So that's the issue with the PINS. I don't feel comfortable enough using today's low as the stop. If this was a runaway bullish market like we had the first couple of months of the year, or like we had the last 3 months of last year, no problem. I'll use the tight stop. But this is a choppy, sloppy market without much follow through, really. Long, stop, but I'm probably going to use either the big stop or at least the wide range bars is low on the PINS. Okay? It's already on the favorites. PayPal, I mentioned it in the other room today, also looks good long term on the PayPal. Look at the monthly. Got absolutely crushed. And it's been basing. The 20 caught up, starting to flatten out. So we know this is probably in the early stages of bottoming. Probably. Weekly, looking good. Daily, I don't see a good entry. So we'll have to watch it. QFIN is one of the China names that is transitioning on the monthly. It's a little bit sloppy. We have topping tails and we have this really strong pivot at 25. But I like the transition. The last time we played the China stock that had a nice transition, it was the TME, and it tripled actually from the from the transition point. So you see that? So that's the pattern that I like, and so we have the QFIN to play. Now, if we look at the daily, that's tough. We look at the weekly, difficult but not impossible at all. Long, right here, stop right here. And then that looks good to at least 25, at least. Okay, so QFIN probably gonna play from the China stocks. Rivian, I've had it on the daily watches for a few days in a row, probably like the whole week last week. Every day was on the watches, but I hesitated about playing it, even though I like the daily, because of the weekly. It was right into the declining 20, and I just didn't feel comfortable to play it. In the meantime, it's been inching up a little bit at a time. So it does look higher. Probably still not going to play it. It never had a straight base. It's like a slanted base. It's not exactly a base unless we played it here, which I didn't. So Rivian is a watch, but will not be playing it tomorrow. The RY had a really nice gap that day, popped, and then it's pulled back. When you have an igniting bar like we had that day, an igniting bar, the retracement should actually be only about 1/3. Normally you want 50%, but if it's an igniting bar, you want just 1/3. If it retraces 50%, that puts the whole pattern in question. So there's an entry on it tomorrow, right here, stop right here, super tight stop, but it's too aggressive for me, so I'll pass and just continue to watch it on the RY. Snapchat we already talked about. The entry would be over 1561, but I'm not gonna, I canceled the order already in my account, and I just have an alert for it. So if it pops, I will get an alert and check it out. We played the Spotify last year or earlier this year. I think it was last year. Yeah, last year. And the target was the 200. I don't know where we entered exactly. Got exactly to the target, and I never got back in it. And look what it did since then. Incredible. It doubled. So Spotify, how did it bottom? Also a transition on the monthly. Somewhere here should have been the entry. Of course, if you were able to get it down at the bottom, sure. But over here on the transition would have been nice. Okay? So now on the daily chart, so this is too far gone as a long-term play, but on the daily has a daily buy setup. Long over 312.16, stop under 305.30. I rarely play stocks on the daily chart unless they look good on the weekly and the monthly, and this one at the moment doesn't, so I will be passing on it. My goal is to pass, but I'll continue to watch it. The stock STOK, pretty thinly traded, beautiful chart. Look at the monthly. That's a nice monthly, decent monthly. Weekly, I guess topping tail, has a daily buy set up over today's high. Stop under this bar's low, or you can give it to the previous pivot over here, but I'm gonna pass. Tiger is another China stock that is staying really bullish. Had a breakout, reported earnings that day, popped, wide range bar, narrow range bar, so like a 1, 2, 3. Long, stop under this bar's low. It's not bad. Let's take a look at the monthly on the Tiger. And that, my friends, is a very nice monthly chart. The daily, I think, is a difficult entry because it's gonna be right into that pivot. Really strong resistance there. So I think this is a difficult entry, and I'm not willing to take a shot at it. But if you like it a lot, long, stop, tight stop. Okay? And if it works, I would keep long term because it looks amazing on the monthly. I may be making a mistake, tell you the truth, by deciding not to play it. It's just that I don't feel, it's like the pins. I don't feel comfortable using this as a stop. I love it longer term on the monthly, so can maybe use $4 as a stop, and the entry would be over here. So that's the Tiger. Is another China name that I like a lot. We'll see. But for now, I don't think I'll be playing it. I'll put it on the favorites and make a decision. The VIR is a daily buy setup, and if you look at the monthly, the monthly is not very good. The weekly is what's good about it. The monthly is still in a downtrend. the monthly charts that I like, or have a 20 that is like this for the most part. So this is not a good monthly. Nice weekly and daily buy setup after a bullish gap up. We'll pass for now. Warby has a beautiful monthly chart. So Warby broke out already on the monthly. I couldn't figure out a way in it. So now has a daily buy setup. So it gapped up, kept running, has a daily buy setup. Sloppy buy setup. But as you can see, sometimes I'm a little bit aggressive with the longer term plays, because if you catch it and it ends up working, one can look to hold long term beyond the daily pattern. The target on the buy setup is the prior high. So right here, entry right here. But I would not sell it at 18. If I was going to sell it at 18, I wouldn't even take it. So this is an interesting watch. I don't know that I'm ready to jump in it, because normally I like the pullback to be proportional to the rally, and I feel like it rallied a lot already, so I'm not sure that it's going to be ready to rally some more right away. But I may miss out on it, and I really, really like the monthly chart on Warby. And then Zillow, I'm also not in. I tried it earlier, and it never really worked. Look at the monthly on it. That's a monthly buy setup in the making. Hasn't yet triggered. Would have to take out 46.05 to trigger. Today might have been the entry day. So over that pivot, long, stop under the SPARS low. It's a sell setup failure. I didn't get it, but keep an eye on it. It looks good on the monthly chart. So those are my long watches, and the only short that I like for tomorrow, is the LI. Breaking down. But big stop up here. But does look lower. Lars, I saw you were in the room. You emailed me a few symbols. Let's take a look at them, and then I'll answer questions, okay? So here's the symbols you emailed. Let's take a look at them. So this is as a transition on the daily chart. So Lars, are you around? Probably are. Okay, no problem. So even if they didn't work, it's just as long as the setup is good. So I want to tell you, this is not a good setup. It looks pretty, doesn't it? But the base is coming from a breakout failure, from a gap failure. So anytime I have a breakout and then the stock comes in and base is at the lows, it's never good. If it didn't have the pop and the drop, then it's okay. If it was just, let's pretend, actually I can probably erase it. Let's pretend this never happened. Here it is. This never happened. And the stock basically just dropped and continued to base. No problem. But the fact that it tried to go higher and failed, got sold really hard, is a big problem. So this is actually no good, believe it or not. Even though the setup is pretty. The base is pretty. Here's the weekly. That's no good. That's really no good. On the, what was it, FUFU, the OBIO is it's tough because it's extended far from the 20. But this is what I live for as a trader. Here it is. Notice the transition, and igniting bar, and then a base. So right here, long, beautiful. Stop right here, beautiful. Up here, there's nothing I can do about it. It's too far gone. So that's too extended. That's the OBIO. NYCB, NYC looks higher. It's incredibly thin. Traded 2,000 shares. But it looks okay. Since it's very, very thin, here's the entry and here's the stop. If it wasn't very thin, I'd put my stop right here. But it's really thin. But it does look good. The weekly, I'm aware it's at resistance on the weekly. And then on the monthly, it's trying to transition. So I like it, but I would give it a lot of room. The WHLRP, wow. Let's take a look. This is actually better on the weekly and the monthly. In fact, it's one of the nicest weekly monthly charts, especially the weekly, I have seen tonight. Now, for me, this wouldn't be playable, obviously, because it traded 6,000 shares on a $2 stock. So the spread has got to be very, very wide. And if I were to trade it, I would need to buy probably a few thousand shares at least to make any money on it, to make any decent money on it. So it would be too illiquid for me. But this is one of the nicest weekly, monthly charts I've seen. Okay, so that's the Wheeler. So yeah, this is a good find, very good find. The RYAM, so went up and is basing. Looks okay. Looks okay. The base is very short. You want to see it base, so you want the base to be, or the pullback either, to be proportional to the rally. Meaning, the bigger the rally, the longer the base. As long as the 20 catches up, it's long enough usually. So the 20 hasn't caught up, but if it bases for a few more days, then I think it would be okay to try it. The RYAM. Prop probably was a weekly buy setup. Let's take a look on the prop, and it is. So prop is a bit sloppy, but that's a really pretty weekly. Sloppy in terms of, look at all these tails, look at the way it moves. 200 above, but that's a pretty weekly. So what I would do is play it long tomorrow, or I wouldn't do it long tomorrow, but if it starts to go back up, then over that bar's high, stop under whatever the pivot ends up being. Of course, this would also be too thin, too illiquid, not enough volume to play for me long. I said, too thin in the room today. Somebody said, what's thin? I said illiquid. What's illiquid? Not enough volume. So, okay, but it looks okay. So the idea is, if you ever send me a list of symbols to look at, happy to do it in the coaching on Mondays. But the idea is not whether the plays did outstanding, or the idea is, am I picking the right stocks? Am I looking at finding nice patterns, or am I finding patterns that look horrible? So, and with time and with my feedback, hopefully you'll get better and better. After a while, you won't even need me. Okay? All right, I saw a question from Terry earlier. I haven't read it yet. Yeah, so how do you manage your swing list if all of your capital already allocated and you're uncomfortable extending your margin ratio beyond what you already have? You could, of course, tighten up on the plays that are near target, near resistance, tighten up on the plays that don't look good at all. But if you're already maxed out, you're already maxed out. So, I just would manage the plays like I normally would and ignore new setups. Now, if you come across a setup that you absolutely love, then you could either, like I said, tighten up on the stops, on the bad plays that are not looking good anymore, or the plays that are close to target, or use your margin a little bit. So those are the choices basically, as far as I can tell. Raj, how are you? Can you share your thoughts on crypto ETFs, miners? Any ETFs already for swing trade before FOMC? So, well, I mean, it's not a secret. I mean, I am in crypto, but in terms of the miners, they don't look that good. We had the Mara, it stopped already today. CLSK, it doesn't look good at all. The Mara and the CLSK are usually the best two from the miners, but none of the miners look good. I don't think. The only crypto stock that I thought looked really good was the IREN, but it's too far gone, so wait for the pullback. And then we have the HOOD, which is the best. I don't think I called the coin officially. I did earlier, but not now. This is also looking good. So coin looks good. HOOD looks the best, which we already have 2 positions in it because I added to it. Should have it. And one more thing, is the Wolf Bitcoin related at all? Does anybody know? Because this one also looks incredible. So if this is Bitcoin related, I like it a lot. That would be number 1 right now. But I haven't checked. I'm aware of it. Look at the monthly. So Hood and Wolf and Coinbase would be the top three. The Iron would be later. Okay, so yeah, so check out the Wolf, the WULF. So I like it. I like it. The CORZs, I didn't know it was even Bitcoin related. It's been CRZ, is it? CORZ, yeah, is really really bullish. Unfortunately, I didn't jump in it when it was breaking out. I noticed it, but it wasn't a good setup, that good of a setup. And boom, gone. So that's too far gone, totally. The IREN, so this is too far gone also on the next entry. I did play it last year, and I'll show you the breakout. And then I was mad at myself because this is what I did. And I had 4,000 shares. So in no time at all, it was up 7K. I got it this day, and I sold it the next day. It went a little bit climactic, so I sold it the next day. And then it went up 2 more days. And I was kicking myself. Eventually failed. So, but I do remember playing the Iron on that breakout, and it was amazing. But I got out early, eventually failed, and now it's hot again. It's really, really hot, but on the next pullback. So in terms of Bitcoin stocks, Hood, Wolf, Coin, MSTR is like Bitcoin. It's almost no difference. And then the Iron on the next entry, but it's too far gone for now. Those are the ones that I like. Okay. Let's see. More questions. If a buy does play the monthly mean must wait for a monthly sell for a profit? If a buy does play the weekly mean must wait for a weekly? No, you don't. You don't have to wait for the weekly to give you a sell setup before you take profit. So if you have a weekly or a monthly buy setup and it's nearing target, you can trail it pretty tight. Like you can exit under a daily bar's low even if the play is very close to target. So like the coin was, I'll give you an example. It's not a great example, but I can't think of anything else. The coin, I played it earlier this year as a transition A. I bought it at 121, I believe. So I'll show you the play. It actually was a weekly buy setup. It's right here, 121, I believe. I believe it was 121. I could be wrong. It's right here. So this bar. Yeah, it was 121 is where I got it. Above this bar's high. I know, it was like, how did I know? It was the weekly triggering long. So I played it here. And then I like the weekly, I like the monthly. I didn't wait for the weekly and the monthly to come in. So it started to go climactic. And I sold it not here, but on the next one. So there's one more climactic on the coin. And that's where I got out. I think on the gap down, to tell you the truth. This is it. So you don't have to wait for the weekly or the monthly to trigger a sell before getting out of it. This was one of my nicest plays this year. One of the nicest plays. Long, stop, and out on this day. So it was amazing. But again, didn't have to wait for the monthly to fall apart. Notice it's, even though it was a good exit, it's back above it. It's back above it. So it looks great. All right, another question for the NVAX play. Yeah, the NVAX, you had to get out of it intraday. The play would what? Would the right play in hindsight be managed intraday? Correct, as a novice gap. So I called the NVAX long on that 123. You see it? Gorgeous 123. Popped, amazing. Popped again. No, gapped up. That day the gap was novice, but I thought it could still move up a little bit more. So the right call would have been to exit on the intraday. Like, oops, sorry about that. Either under the 5 or the 15. That would have been the right way to do it. And that's the thing about, like, if you know what you're doing, it's much easier to follow me, because then you wouldn't need me to like alert you on every single move, because sometimes, like, exit was basically at the open. If you were able to exit at the open, great. If not, I mean, it came in and basically gave it all back and stopped out. So yeah, the exit would have been at the open. Let's see. Can you bring up the crowd? Yeah, let's bring up the crowd. By the end of the day, is that what you mean? Failed breakout with the first buy setup fails and the breakdown more? What? All right, I'm trying to yeah, but this one was okay actually. So the question is, when you have a failed breakout fails, the breakout usually doesn't fail right away. So what normally happens is people don't even notice it. You get a breakout bar, and the breakout bar, we don't get another green bar. So let me just show you real quick what it looks like if I were to color code the candles, easier for you to see. So here's the breakout. In order for it to be a successful breakout, the second bar needs to also be a green bar. Now it's a successful breakout. Now usually, it doesn't have to be this big, but we need another bar. The first bar is just, that's the teaser. It's not usually enough. What a lot of times ends up happening is you get the first bar, and then the second bar ends up being, you guessed it, a narrow range bar, or like a small red or small green, like this. That's not a very small bar, but you get the point. A narrow range bar. And then the stock proceeds, it sometimes prints more than one bar, like 2 or 3, but if the stock breaks under that bar, guess what? It usually ends up breaking the base. So the best way to deal with this is, if you're in the breakout, trail it to the sparse low. Get out of it. Don't wait, don't keep your stop here, because that's where the stop usually is. So don't keep it there. Raise your stop. Now let's say you're not in the play at all, and you have a breakout, and the same thing happens, breakout failure or breakout with no follow through, comes back in. Should you do the buy setup? And my answer is don't, because it usually fails. You can do it though if it comes in and then goes back up a second time without taking out the prior pivot low, like a W pattern forms. So the question is, so I said, here's the CrowdStrike was setting up long. I'm not going to take it because I see the breakout with no follow through. I didn't. And so the question is that what you mean by a breakout and the first buy setup not playable, breakout failure with a, yes, but on the CrowdStrike, it was okay to do it on the next entry. So right here, next entry. So not the first entry. The second entry is okay, but I think, I don't know if it worked. Oh, it didn't work. Yeah, it didn't work. That's why you're asking about it. But I think it would have been okay to do it on this entry, tell you the truth. I just never touched the CrowdStrike today. Didn't play it. But on the first entry, for sure, don't do it if it came from a breakout failure. Okay? What's the shortest time frame that I use? The 1 minute time frame. The 1 minute. For swing trading, the hourly is usually the smallest time frame that I use. If the play is gapping or going climactic in my favor, then yeah, I may go to the 5 or the 15. But for swing and long-term trading, really, I only use hourly. Let's type hourly, daily, which is my primary time frame, weekly, and monthly. That's it. I don't ever look at the 15 or the 5 when I'm scanning for new setups. I only, and that's rare, use the 5 or the 15 when something like the NICE today. That would have been the right thing to do, is to sell it at the open or trail it under the 5. Trail half at least. Or like the NVAX a few days ago. A huge move and a big gap, sell it or sell half under the 5. But for finding setups and scanning for setups, only go down to the hourly chart, nothing smaller. Would you say your bread and butter trades are day or swing trades? Hey Steve, how are you? It depends. I know you want me to tell you for sure. I can go back year by year and tell you what year I did better, like day trading, swing trading. Literally, I can go back to probably 2011 or so. No, so that's what I'm saying. I don't have it generally speaking. It's mixed. 50% of the time it's day trading. 50% of the time it's swing trading. During the pandemic, in my day trading account, I made over $1 million each year. In the day trading alone, I didn't make that kind of money from swing trading. So again, it depends. The last couple of years, swing trading has been the way to go for me. The last 2 years. So it just depends. Some years day trading, some years swing trading. It depends on the market environment. Now, if you're trying to decide what you should be, well, you have to study your own situation. Can you be a day trader? Do you have the time to allocate to day? Because swing trading takes a lot less time, to do it, and you don't have to be. You can do it anytime after the close or anytime before the market open. The scanning and the order entries, and then you can just go away after that. You can put bracket orders and go away. Day trading, you have to be here and watching and ready to strike. So can you allocate? So can you find the time? What do you gravitate towards naturally? Is it day trading? Is it swing trading? Is it scalping? What is it? So it's important to also there's a lot of different ways to make money. It's important to find a way that you naturally gravitate towards, that naturally suits you. Is who makes more money, doctors or text people, software engineers? I don't know, but it's not usually who makes more money. It's what am I more suitable to do, and what am I more suitable to study. Be a computer engineer or AI data scientist, whatever, or be a doctor. What am I really? What's my calling? What am I into? So just yeah, I mean, sure, doctors by far, if you're versus engineers. But I do have a friend whose son works for Google, and right out of school, he's making over 300K, right out of school. Now, if you're an MD and you've spent 12 years, and sure, you probably will still make more than 300K the first year, but then you're probably gonna spend the first couple of years just paying off your loans and debt. So, and you've spent 12 years or however many years to be a doctor. So, I don't know. So I'm just saying. Okay. Can you please elaborate on your setups, the top 3? All right. Let's elaborate on my setups. So the way to think about it, when it comes to swing trading, let's just when it comes to anything really, stocks don't move in a straight line like this. Rarely do they move up like this. They move up and down, up and down, up and down, right? Now sometimes the up and down is within a larger uptrend, like this. True. Sometimes the up and down is within a larger uptrend. But if we were to analyze that move, that wave, it's gonna look something like this. So it'll be initially down, base maybe, or sometimes a sharp reversal, up, down, base, or sharp reversal, up. You see what I mean? And it might not come all the way back down to the prior low. Again, it could be in an uptrend like so. Doesn't matter, but it's up and down. So if you believe me that this is the only movement possible in trading, if you believe that that's the case, then what do you got? Where should we enter? Right? It's right here when the stock is breaking out of the base. Right? When the stock maybe is topping out short, which is the inverse play. It's the reverse image. The flip side of this breakout is the top short, right? And then you might say, what about this big move up? Do we just let it go? No, you can play the big move up through pullbacks. So a pullback like so long right here, stop under the pivot, or if the stock bases, because stocks can only correct through time by going sideways, or through price by pulling back. through a base breakout, or through a 1, 2, 3. 1, 2, 3. That's meant to be a straight line. So my top setups are, so first you have to understand the only movement possible. The thing about trading, guys and gals, is that, I would be doing you a disservice if I told you that, here's my top 3 secrets, and and you thought that, okay, I got it, and tomorrow I'm going to be the consistently successful trader. It doesn't work like that. That's like total BS. That's, it doesn't, it's there's a lot more to it. But the first setup and strategy that I do is called the transition A breakout, right here, as the stock is bottoming and starting to transition higher. If the stock is already in a well-established uptrend, then I do look to play the buy setups or base breakouts or 1, 2, 3 setups, whatever I get, whatever I find. So buy setups, breakouts, 1, 2, 3, in the context of an uptrend. I don't usually get involved with the base while the stock is basing unless we get a breakout, in which case I play the base breakout. That's what I'm doing with the TRGP, right? And then here, as a short, it's the opposite of the transition A. It's called transition C. And you can look to play it, the breakdown short. It doesn't happen very often. It doesn't form very frequently like this one here, the transition A breakout does. Okay, so that's why I wouldn't focus that much on it. And then when the market is in a downtrend or the stock is in a downtrend, you can do the opposite. Instead of a pullback and a buy setup, a counter rally and a sell setup. A base breakdown instead of a base breakout, and a 1, 2, 3 short. So on the way down. But the way down also, when the stock is dropping, it doesn't just drop. It drops so fast, so hard. It does, if you don't get it fairly early on, you're not going to be able to find very many good setups on the way down. So most of the money in swing trading, for me at least over the years, I noticed, not because I'm more biased, bullish biased, it's because it's just the way it is. Most of the money I made was playing long, not short, when it comes to swing trading. So if I had to give you 3 top setups, I would just go with the transition A, the buy setup, breakout, and 1, 2, 3. That's 4 setups if it's in an uptrend. Okay? Now there's more setups, but those are like the most common setups that I take. All right, there's another strategy that I do, which is based on earnings, but that's like, it would take me a while to explain. Basically, when it comes to earnings, I can actually explain it in 1 minute. When it comes to earnings, how do I predict whether something is higher or lower? I'm looking for bullish stocks that are showing short-term weakness. It means investors are bearish on the stock, even though it's a really bullish stock. Which means if we were to translate that, that means it's like the Michael Jordan of stocks, and yet investors are selling it the day or the couple days before earnings. So it's like I'm trying to find the Michael Jordan of stocks, really bullish, and yet investors are selling it, which means they have low expectations for it. So yeah, the MJ of stocks is NVIDIA, you're right. Enough said. Absolutely. But and guess what? We played NVIDIA on earnings. We were in NVIDIA on earnings, but I did sell on that drop. But we were in it on that earnings gap. So that's the idea behind the earnings strategy is, can I find bullish stocks with low expectations? Because if the expectations are low, it means it doesn't take very much for the stock to gap up if the expectations are really bad. And then the company maybe surprises by a little bit, or even just meets the expectations, like whatever the EPS is or whatever, right? It actually doesn't miss in a bad way, then it should gap up. So that's the idea behind the earnings strategies. I'm looking for really bullish stocks with low expectations. If the bar is very low, it's easy to exceed, right? If the stock is very, very bullish, and it's way up, I can't, because now it's, now it could the expectation is very bullish, but it's really overbought. I don't want to be buying it here. What if they actually miss, or something bad happens during the earnings call? Something bad is said during the earnings call. It could gap down a lot. So that's the idea behind. So I do the earnings strategy, which is one of the most, probably the single most profitable strategy over time. Because since 2017, I think the plays made over 850K. Just that one strategy alone. And now we're not in earnings season, so, so right now I don't have a lot of things to pick from. I sent you an alert about the ASO mostly that I liked short, which I did like it. I was gonna do it, and then until I zoomed out and I saw that it was into an area where it really popped from, so I changed my mind about it. But if I had like 20 items to pick from, 30, 40, 50, 100 symbols, I'm gonna find something good. When I have just a couple of liquid stocks, it's it limits my choice. So, and I don't want to settle for a low quality setup. But I liked it, just didn't like it enough on the ASO. That's why it was just an idea. The last one I think we did that I liked was HPE, and it gapped up. Why? Because again, was really bullish stock. Look at the monthly, was breaking out over a multi-year base. And yet, investors were pretty bearish on it. I mean, ahead of earnings, before earnings. So, boom, gap up. And got sold that day, unfortunately. But it doesn't matter. It was a 17% gap up, so it was nice. So that's the idea behind it. And then there's a third another strategy, not a third, that I also discovered on my own, which has to do with gaps. If the stock is down a lot and then ends up gapping down, like Meta was, for example, down a lot and ends up gapping down, that often leads to a bottom. Right, that often leads to a bottom. So look for an entry in it long. If it's down a lot already and then gaps down a lot, look for an entry long, and then that was actually the bottom on Meta. But not just Meta. I mean, almost every stock eventually, like Tesla also. How did you think it bottomed? It gapped down, and then the gap down got bought that same day. But in this case, it was a few days later, and then it ended up being the bottom. I bought Meta. This was my worst mistake of 2023, last year. I bought Meta at 122. I tried to buy it on the base breakout here on the hourly chart, but it gapped above my entry, so I missed it, and I bought it right here. And guess how many shares I bought? 800 shares. And guess where I sold it? You guessed it. Half here on the gap up, which was okay, but I knew to hold it long term. And then half somewhere here, maybe like here, I don't remember. And made really good money. Don't get me wrong. But, I mean, it's at $500. So the name brands are good if they're down a lot, which Meta was, like down over 70% maybe. They're good to if you catch the bottom, to never let them go. To try your best to never let it go, basically. Unless it becomes obvious that you should get out of it. But I try to catch the name brands at the bottom, off the bottom. I did catch Tesla, and at some point it was up a ton, hundreds and hundreds of thousands of dollars. But of course, Tesla ended up crashing back. And so Meta would have been the better play. So, okay. All right. How can you tell when your name brand has bottomed out? What indicators? Like I said, there are certain things that I look for, but the clearest is when it's down a lot and then ends up gapping down on high volume. Look for the next entry after that. But there are a lot of different ways to tell whether it's gapping. So, it's with experience. It's also, like studying the methodology, being more knowledgeable. You can't tell for sure, but you can speculate that it might be the bottom, and you give it a try. If it works, hold on to it. That's my point. Okay? I don't use RSI. Have you ever heard me say RSI? Ever? In 20 years? Never. Yeah, no, I only used the RSI when I first started because I didn't know better, but I don't use the RSI at all. Okay, Steve, no problem. I only use basically price and volume, and the moving averages, they're nice because they they tell you where you should get in. Like, look at the 20. Where should we get in? Right at the 20. That's where the stock usually bounces off of the 20. If it's pointing up. So, and it gives you like, it paints a clear direction. So it makes it easier to read the trend when you have a 20 period moving average. And the 200 is just a long-term moving average. I'm actually going to talk about moving averages in detail on Wednesday. I have a little presentation for you that will explain exactly how to use the moving averages. Okay. Alright guys, that will do it for today. I hope you had fun, and to be continued. I'll see you tomorrow in the other room, in the strategic day trader room. Hope you're enjoying it so far. Thank you so much. Have a nice evening, and I will get working on the newsletter for tomorrow. It'll hit your inbox by tomorrow morning. Of course, if you're a subscriber, you have access to that Google sheet. You'll see the plays tonight, but you'll get the email also in the morning. Thank you again. Have a nice evening, and we'll talk some more. We'll trade some more this week, the rest of the week, tomorrow morning. Thanks. Good night.